Hey team, it's Ray Campbell with Fairway Independent Mortgage. It is Tuesday, July 25th. Wanted to give you a quick market update here, let you know what we're seeing here in mortgage rates and bonds and the economy. Looks like interest rates are up a little bit. We've got quite a few things going on that we're trying to work through in the bond market. And the biggest thing, of course, is this week we have tomorrow we have Fed minutes, Fed decision, coming out where they're expected to raise the Fed funds rate by another 0.25%. And of course, that's to reduce inflation, slow down the economy, and kind of get things back under control. So what that's doing is causing a little bit of uncertainty and in mortgage bonds. We've got a couple of things happening with liquidity that basically we've been dealing with since March, where the banks are trying to rebalance their balance sheets and pulling out of a little bit on the mortgage-backed security side, which of course that they sell off, and then that causes the prices to change, and then that causes interest rates to go up when they have this additional selling. So the banks are still working through those liquidity issues, trying to figure out what they're going to be doing. And part of that issue is that the Fed is raising interest rates so fast, and that's changing, what they're being able to lend, what they're, the liabilities and things that they have out as well. And so it's messing with the numbers there. And once the Fed figures out that, tomorrow that's supposedly going to be the last rate hike that they're going to do before they pause for a while, and if they do, then that's going to be a really good thing, because we can know that they're done. They're going to stop messing with things. Banks can readjust. They'll know what the numbers are going to be for at least for a little while, and then things will come down a little bit. So that's the issue that we're having right now. All of the reports, everything we've been talking about for months now, they're all going in the right direction. The economy is slowing, just not as fast as everybody expected it to. Inflation is coming down as well, also not as fast as everyone expected it to. But they are going in the right direction, and those things coming down and slowing down are going to bring down interest rates. The issue is going to be, of course, timing, right? When all of that stuff actually happens, and then we'll just have to figure out where interest rates are going to be. But for right now, they are up. We're back up into the sevens. You can buy down, and so this is a calculation and a conversation that lenders should be having with the buyers of what their options are. Do you want to buy down interest rates? Do you want to pay discount points? Do you want to do temporary buy downs? We want to talk about the options. Give those to them. Let them decide which way they want to go, and then determine what their thoughts are, and get them into the right mortgage for whatever it is that they're looking to do. So interest rates are up, but they are going to be coming down, of course. It's going to be a timing thing, figuring out where those are. And tomorrow, like I said, we're going to have the Fed decision tomorrow. Rates should go up by 0.25% tomorrow. That's short-term rates. That's not mortgage rates. In general, that's going to reduce mortgage rates. However, lately it has also been a big factor on what the Federal Reserve says in their comments after the decision. So whatever they say tomorrow is going to dictate what direction that we go. If they say, hey, we're going to pause, it looks like inflation is coming down, we're going to pause here, that will be a good thing. And then we'll just have to see how the bond market reacts. And of course, stock market is also going to react. And then of course, there's a fight for money between stocks and bonds. So it'll be interesting to see what happens tomorrow. And then we also have inflation reports that are going to be coming out. We always look at those, and everything, there's treasury auctions happening this week. There's the Fed decision. There's inflation reports coming out. There's consumer confidence report that just came out as well. And so that's not really helping mortgage bonds. It's helping stocks. But we'll just have to see where all those things line out and where we go here in the next couple of days. Looks like we should be coming down a little bit, but we'll have to see what the market says. So keep an eye on it. We could have a lot of swings, interest rates moving all over the place here in a very short amount of time. Sometimes that happens for us, where interest rates could get worse by 0.25% in a day, or they could get better by 0.25%, or they could get better and then worse. So there's a lot of different things that can happen. Just keep an eye on it. Let us know if you have any questions or want to get into a deeper conversation about it. We'll be happy to do that with you. If you need anything, feel free to reach out to me or my team, and we will talk to you guys soon. Bye.